How's it going, everybody, especially beginners in the cryptocurrency world? I'm going to cover central banks in today's video. So it's something that you should know entering any type of financial market. It's some basic economic information for all of you out there that are willing to learn a little bit more about how the global economy operates, how countries operate, what are lenders of last resort, what are moral hazard problems, and I'm going to take you on a little Investopedia roller coaster right now to explain a story of central banking and its importance. So let's just get straight into it. First of all, the US does have a central bank. It's the Federal Reserve, and the head of the Fed at this point is Jerome Powell, some guy that I talked about in a lot of previous videos, so you could probably check that out and just see whenever I mention JPOW, it's probably because of rate hikes, and it's probably because it does significantly influence the market. So what is a central bank, right? It's a financial institution given privileged control over the production and distribution of money and credit for a nation or group of nations. They are in charge of monetary policy, and it's basically the head bank in the country. Many central banks are not actually government agencies, so they're often, touted as being politically independent. However, they are privileged, they are established and protected by law, and they are in some sort of form a legal monopoly, which means that they are free to do whatever they want to. Now, some of the important things you should know about a central bank is that they're always there to help out other banks that are in need or in desperate problems, right? And this is going to tie back to the 2008 financial crisis. It's a point that I'm going to make just in a few minutes from now. But the main thing you should know about central banks is it is the most important body when it comes to financials and economics in a country. They are in charge of monetary policy, which is there to influence GDP, to influence output, to influence economic growth, and a lot of other factors that are there. And essentially their whole goal is to keep the whole economy stable, right? So not too high inflation, and also at the same time not too high unemployment, which is a scale that has to be respected at all times. And it is the number one problem in economics in the entire world, because it's impossible to have an ideal inflation number and an ideal unemployment number with today's standards, right? Because there's a lot of debt around the world, there's a lot of problems around the world with production, there's a lot of problems with unemployment, this crisis that happened recently, and a lot of these things are influenced by monetary policies from the central bank. Now, if you want to learn a little bit more about monetary and fiscal policies, I did make a video about it, and by the way, this is JPOW himself on the thumbnail right here. I did explain what the Fed is doing, what monetary and what fiscal policies are, so I do recommend you check that video out yourself. But just a few takeaways about central banking itself. It's a financial institution. It's responsible for overseeing the entire monetary system by easing or tightening the money supply and availability of credit. Central banks seek to keep a nation's economy on an even keel, so on a scale. A central bank sets requirement for the banking industry as well. So they set interest rates, and they operate all of these things through their own policy. For example, they choose, rates. So how it goes, Powell chooses rates. The central bank approves the rates. The rates are sent to other banks, and the banks respect those rates. And lastly, a central bank can be a lender of last resort to troubled financial institutions and even governments. So what is a lender of last resort? A lender of last resort is an institution, usually a country's CB or central bank, that offers loans to banks and other eligible institutions that are experiencing financial distress or are considered highly risky or near collapse. Now, in the United States, the Federal Reserve is this body, and the lender of last resort essentially provides emergency credit to financial institutions that are in trouble. Now, this may tie in, back to financial institutions in 2008 that have experienced trouble and had to have been bailed out by the government. Otherwise, it would cause an even larger effect on the entire economy than it actually did at that time. So a lender of last resort, or having one in the economy that's either the government or most usually the central bank that is backed by the government, is a very crucial thing for every single economy out there. Now, the Federal Reserve, for example, or these other central banks acts as the lender of last resort. And, these banks that fail to obtain credit, they would literally very drastically influence the economy, because it would cause a bank run. People would fear even more, and it would just cause all out distress around the entire economy. So it's very important to keep at least banks under control in times of financial crisis. So some argue that having a lender of last resort encourages moral hazard, which means that banks can take excessive risks knowing that they will be bailed out, which leads me to my next point of moral hazard, which is the risk that a party has not entered into a contract in good faith or has provided misleading information about its assets, liabilities, or credit capacity. That basically means that, if you're a bank out there and you know that you're going to have a lender of last resort if you become insolvent or illiquid or there is financial trouble, then you're going to be very aggressive with your investments. You're going to be not careful with your investments, and you're going to just not care because you know that there's someone there that's going to back you up at the end. So moral hazard is a huge problem in economics, especially in insurance and lending industries, because people are very prone to risking a lot more when they know that somebody is going to bail them out at the end. And it basically means that any time a party in an agreement does not have to suffer the potential consequences of a risk, the likelihood of a moral hazard increases. So how does this come back to the 2008 financial crisis, and how does it come back to central banking? Well, leading up to the 2008 financial crisis, the willingness of some homeowners to walk away from a mortgage was a previously unforeseen moral hazard, right? And this just makes perfect sense, right? A lot of people just very simply walked away from their mortgages, and nobody could anticipate them except for a few people out there, such as what you can see in The Big Short. It's quite a good movie. I may even link it down below for you guys to watch it. But in general, people, when they have, the availability of some party to cover their losses or to bail them out of a situation, it's a very difficult situation for the economy, and a moral hazard should always be considered. So what is a central bank? I hope you understand right now. It's a very important concept out there. Central banks are there to bail out everybody who's in need, to set monetary policy arrangements and rates and all of this money supply in the economy, and also to generally provide a body that is on top of all and the entire banking system or sector in the economy to provide the leadership for everybody out there. So hope you understood that, and right now I'm going to show you how to actually track all of this central banking activity. There's a pretty nifty website out there called Forex Factory where you are able to check out all of the news coming out from a lot of different rate hikes, a lot of different countries out there, forex communities, inflation numbers. Italy, United States, Canada, European Union, every single country out there will appear in Forex Factory. It's a pretty good website. You can check out news, you can check out trades from different people, you can check out a calendar, which is what I'm showing you right now. And as you can see, tomorrow is a bank holiday in New Zealand and in Australia. December 26th, bank holiday in pretty much everywhere because of Christmas, right? It makes perfect sense. And this entire week right now is going to be a very, very low volume week because a lot of traders are on holiday, a lot of banks are on holiday, and you should expect not too much movement going on until the first week of January passes. Just then, we're going to see a little bit more volume coming back into the market and a little bit more movement that we can expect from all of these monetary and financial institutions, and also Bitcoin, and cryptocurrencies on the charts. So one thing I would advise for you to do is, I'm not a financial advisor, but one thing that's smart to do is, in a few weeks, so second week of January, third week of January, start looking back into the market, start seeing the potential dates where there's going to be important news coming out from all of these financial institutions. For example, we will have CPI news coming out from Switzerland in like 2 weeks from now, right? January 4th. We're going to have non-farm employment change from the US, JOLTS, job openings, FOMC meeting minutes, very important news coming out from the US on the 4th of January as well. It's definitely something to keep in mind going forward, because it will give you some valuable information as to where the market's going, how the economies on a global level are reacting to news happening around the world, how they're creating news, and how Bitcoin, stocks, and all of this stuff is going to react to all of these things. So it's very important to keep that in mind as well. And with that being said, thank you for joining in for another video. I hope you guys enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below if you have any questions for me. Check out my previous videos. There's a lot of good knowledge in here for you. And with that being said, I'm going to leave you to it. Enjoy your day. Merry Christmas, and I'll see you guys in the next video.